For live on a Tuesday at 11:27 a.m. November 24th. You all know what's going on today. We've been talking about it on Twitter. It's hot. An exciting day, an exciting time. Politics is insane. Financials is even more insane. So that's why we're here in crypto, because it's a big middle finger to the legacy system. I consider crypto a big middle finger to the legacy political system, the legacy financial system, the legacy institutions, the legacy banking system. Because basically our entire lives, I'm young, 37, not that there's anything wrong with being in your 40s and 50s and older, I'm just saying. But I never experienced no 5, 10, 15, 20% interest rates at the bank. Just saying. So basically, JP Morgan Chase has been giving me the big middle finger my entire life, saying, fuck you, give me your money. I ain't giving you shit for it. No more HSBC giving me the finger, saying, fuck you, Noah, give me your money. Pick another bank. Because every bank saying, fuck you, Noah, give me your money. I ain't giving you nothing for it. So I'm not playing that game no more, banking system. Fuck you. Okay? Today's episode, as with every episode, is sponsored by Change Angel, non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto. If you don't have your keys, you are taking risk. Now, this channel is all about calculated risk, about minimizing risk, about taking risk that is understood, and when taking risk, taking it with the most trusted of parties. And we discuss risk all the time. Maker DAO positions over here. We got curve positions over here. We got liquidity position with Bancor. Provide liquidity to Keeper DAO. And what else? That's my leverage. That's my risk. I provide Bitcoin to Celsius as well as BlockFi. I got risk on the table. What is it? 15, 60, 65% of my Bitcoin, 60% of my Bitcoin is on loan, is leveraged. 7.5, 25% is with Celsius and BlockFi, and the other percentage is with Curve. It was with Maker, which I leveraged to put in the Curve. And then I got a bunch on my ledger, so I got a bunch in cold storage. Anyway, today's title is Bitcoin Discovery Mode Imminent. You all know what's going on today. We're going to hit the charts. We're going to hit them hard because the charts, the technicals, match the fundamentals, and we are on the verge of some serious fuck you banking system shit going on today. Let's pop it over to the main screen and see what's going on. Who's in the stream? We got Captain Weber. Always a pleasure. Yes. Serious, guys. This is the captain here. Yes. Love it. Still can't get over those lobster tails. I love that, man. That was good stuff. Appreciate that. Adam. Love Adam. Macro narrative for Adam is basically, these are long term. These are talking alts. We're talking potential early stage systemic disruptions. These are years out, I would argue. Clearly, Adam can make a big run and make a lot of money in the short term. But if you're talking Atom and IrisNet and the hub and all the components of the Cosmos infrastructure could potentially be part of a Chinese blockchain framework at the national level. So what do we know about Atom? IrisNet is a Cosmos hub. IRETA is using IrisNet as the blockchain. And IrisNet is potentially basically what is likely the interop solution for the BSN. Holy crap. Talk about boom right there. Boom. So I think Atom is a big deal. I think Iris is potentially even a bigger deal. And now clearly these are risk on positions. They are currently not the biggest of deals, but that's the whole point. You take 1% of your portfolio and it turns into 20% of your portfolio. That's a risk on bet turning into a big deal. And that's basically what Ren was at the beginning of the year. Ren was, all right, fine. Interestingly enough, when I took my position in Ren, it was a little less than 10% of my portfolio. And now Ren, interestingly enough, it was at one point like 50% of my portfolio when it ripped to just ridiculous numbers. And now it's back down to probably about 10% of my portfolio because Bitcoin has just gone astronomical. This is the wildest year. Incredible. Stops in the house. RR's in the house. Ear ends in the house. Rick's in the house. Stelios. Yes. Barry. Yes. Raise your middle finger. The bank's like, no, listen, I'm done, man. I'm done with this banking system. I'm tired of being shit on by the legacy financial system. I work too hard and we make good decisions. We should be given a way to invest and grow our wealth and preserve our wealth. Then did I say grow our wealth? For the love of God, give me 6%. Oh, yeah. That's right. I could get 6% in the crypto space. I'm not going to get that shit from legacy financial system. I'm not going to get it from a bank. And I'm taking too much risk putting it into REITs and other dividend-bearing equity instruments because there is no equities market. The entire equities market has become an extension of the Federal Reserve and the U.S. Treasury fiscal stimulus because if they stop providing stimulus, the system would implode in a deflationary spiral. Bam! That's the bottom line. Heirlooms in the house. SoCal. Woo! Always a pleasure. Cal's in the house. Will we be allowed to earn interest on Digibyte? Yes. Yes, you will be able to earn interest on Digibyte. So right now, Digibyte can be minted into REN DGB. The REN bridge needs to be uh, uh, improved. So REN DGB support needs to be provided to REN D for REN DGB, but REN DGB the functionality is available in the dark node implementation. So, but what you need is collateral and liquidity. So the collateral needs to be provided to the liquidity providers such that there's liquidity, so you can swap between REN DGB and other assets. So it's not going to be done via curve because there's no like WDGB currently. But there's no reason you can't have REN DGB on any of the AMMs. Well, Uniswap obviously, balancer and stuff like that. DAI, REN DGB. So someone go start ponying up the bucks, and if they're and then you need incentive. You need a reason for folks to mint REN DGB, which is basically like MakerDAO, Aave, and other places that where you could borrow and leverage. So you could use REN DGB as collateral to take a leveraged debt position, and that's a reason to mint REN DGB because you want exposure to Digibyte and you want to use it to as collateral for a leverage position. So these are parts of the puzzle that could be meaningful. We'll see what happens. Heirloom says about the lobster. Yeah. Igor says, Iran says, Rook retrace. Yeah, Rook took a big fat hit. Let's take a look at Rook because just because price action doesn't mean much to me. It's how we handle price action. So nothing changed with the macro narrative. This asset is absolutely ridiculous. In fact, the liquidity is just growing. The liquidity provided to the Keeper DAO is just going straight up. Let's take a look at the yield real quick, and obviously let's reload the price and the chart. So I got four things up for Keeper DAO. I'm keeping my eye on it, and I'll tell you how I'm handling the depreciation. So obviously it's just making money. The Keeper DAO is growing in the amount of money it's making. It's up to $1,486,000 in yield. Absolutely incredible. The price action has taken a fat hit. It's currently at about 80, yeah, 89, $89, which is up 200% in the last 2 weeks. So people are saying it's dumping. It's up 200% in the last 2 weeks. So you got to really have some perspective. I myself took my position at $77. I took a bunch at 120. I liquidated, I think, I saw it go up to 200 and change, 220. I liquidated it at 170, 150, but I still have a fat bag. But bear in mind, so how am I dealing with the decrease in price? So you have impermanent loss, which is a reality for AMMs like Uniswap. So if Rook goes to $1 million a token and you're in an Ethereum Rook pool, you're going to lose money because people are going to buy all of the Rook and the pool is going to be heavy Ethereum. So you're going to miss out on the gains from Rook. So bear in mind, on the other way, it protects your losses. So impermanent loss protects your losses. So as people are selling their Rook, the pool is going to be heavy Rook. So bear in mind, I have 41 Rook there and 6.2 Ethereum. This thing was up at 8,400. So I've lost about $1,000 on my Ethereum Rook liquidity position, partially offset by gains in the liquidity pool, which have total $241, which is obviously 3 Rook or zero point 0.2 Ethereum and 1.3 Rook. So just by providing liquidity, you're able to offset losses in this in the Rook asset, which is likely highly asymmetric, or is highly likely to expect asymmetric returns in the future. So I'm risk on Rook. It is not a large position for me. You should not be taking. You should be taking 1%. And clearly, if you have $1,000, the all this type of portfolio management changes and everything changes, and you guys have to not be greedy. If you have $1,000 you're investing, you can't invest like me. You can't take too much risk. So there's two schools of thought. If you're going to invest like me, you're not necessarily going to make massive gains. You have to have concentration of wealth to make epic gains. And I'm investing as risk off, risk minimized. I want min risk, max return. So if you're going to go for my style of investing, where this is 1%, 0.8% of your portfolio, it's probably not necessarily the best approach. I don't know. I'm heading down the road of potentially being tempted to give investment advice. The best point I could probably make is with smaller portfolios than my own. There's very different portfolio balance and portfolio management considerations, and that's just real. Um, Money is made when you concentrate wealth. Money is protected when you diversify wealth. Albeit, that's not necessarily the case because if I have 1% of my portfolio allocated to Rook and Rook goes to $5,000 an asset because the market cap, have you seen the market cap? I got 41 Rook. This has a $4 million market cap, and you got assets running around at $400 million. So if this goes to $8,900 an asset and I have 41, all of a sudden Rook isn't 1% of my portfolio. My lord. So that's why this has, you only need a small position in an asset like this to produce significant asymmetric returns. So you don't need to over leverage or over apply position sizing. Anyway, that was a monologue. That's what I'm good at. Igor, what's up? Finland, my man. That's right. Noah, how do I stake Iris? So to stake Iris, you go to here. You go to Cosmos Station. Wallet.cosmosstation.io. And I don't have my Nano X. I need my Nano X because that's where I have my Cosmos app. You connect your ledger, and this is where should have a ledger. If you're doing any of this stuff, have your ledger. And there's your Iris hub. You have Iris, Kava, Band. You use the Band one, but you can do Cosmos here too. But here, there's 3 of them: Band, Chain, Explorer, and you'll have the URLs here: cosmosscan.io/account, and there's your Band Explorer. I got a bunch of Band, and look, the Band. Here's your yield. Here's real-time yield. There's $7 worth of interest on Band. Oh no, yeah, $36 worth of interest, 5 Band, and it just keeps coming in. And that's the thing with the Cosmos assets. When you delegate to a validator, you just get in yield, 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 yield. It just keeps coming. Look, you can watch this all day. It just keeps going up. So that's how you do it, boys and girls. Stelios in the house. Always a pleasure. Yeah, we're getting rewarded. Some serious stuff going on right now in the markets. We're going to get to the Bitcoin chart. We're going to take a look at Atom, Dot, Bancor, and Curve. RR Ledger. Go for the Ledger. Stelio says the rewards in compound staking and Curve is max 33% right now, and I'm in Urine looking for 5%. Is that the real difference? I think those numbers in Urine are premature. I know what you're talking about, the Urine compound pool. So I think it's just early to tell what the full returns are for this compound pool. Personally, I go directly to Curve. I provide leverage liquidity to the Curve compound pool, which is currently yielding 32.95%, and I'm getting 5.22% on my DAI, which is nice because here, this is what I showed everyone the other day. I am earning 5.22% on liquidity I provide to the compound pool, and then at the Oasis, 4% of it I owe them. So this is increasing 4% continuously. But bear in mind, I'm also getting 32.95% yield denominated in CRV, which is an asset that has potential asymmetric returns. That can have potentially asymmetric returns. I have a couple bucks over here. This is some GUSD I minted, which is yielding 1.32%. I don't really care. And 64.6% yield denominated in CRV. So I used to convert it to VECRV. Nowadays, I've been converting it to YVECRV to get 1.5x on my curve admin fee returns. I have about 530 curve that I can mint, about 2000 YVECRV, and it just keeps coming. It just keeps coming. It just keeps coming. Ooh, it just keeps coming. That's the name of the game. Also, is the danger of impermanent loss on the pool Wi-Fi ETH on Uniswap. Uh, go to yeah, you got to be careful with impermanent loss. So bear in mind, impermanent loss is not a loss. It's just missing out on gains. And missing out on gains is not the same as a loss, really. It's just disappointing. You just didn't get the gains, but you didn't lose anything, and that's important. So I myself wish I had Wi-Fi. YFI is the asset ticker. It's just worth a fortune. And I think Yarn is one of the most important platforms in the entire crypto space. And they're really going to pull together synergistically with all the AMMs and the other DeFi automation platforms, the Pickle, Acropolis. I don't know what Seal's doing. Simpsons Finance. I mean, there's so many of them nowadays. Was it that Barn Finance? I don't deal with any of that shit. I have no interest. I just provide liquidity to Curve. LP is the biggest risk I'm going to take. LP and the Yearn. Actually, I mean, obviously, I'm participating in a Yearn vault, particularly because I don't see much risk in this. Obviously, the complexities in the contract's implementation, but it's not like overly complicated. It's holding CRV, and the CRV admin fees are directed proportionally to the holders of the YVECRV asset. So it's not the most sophisticated vault as compared to the other strategic ones. This is probably sophistication in the compound pool, which does that automatically and pays for gas and automatically extends. It uses the ape, so it automatically extends your VECRV lock period. So there's complexity. This is complicated stuff what these boys are doing. Anyway, Igor says, so can I send Iris on Cosmos app and Ledger? Of course. So you have your Cosmos app and Ledger. So send it to this address. Send it to your Iris address. So when you go to wallet.cosmostation.io, you connect your ledger and I don't have my Nano X right now, but you connect it and you'll have uh, your Iris address derived from your Cosmos app on your ledger. Here, bam. Here's your Iris app. Network equals Iris. Bing, bada, boom. Pellets in the house. Always a pleasure. Check room on Etherscan. CoinGecko circulating supply is wrong. Elaborate. Elaborate. What does that mean? Check Rook on Etherscan. Checking. I don't need Etherscan. Let's see. Is there more? What's the supply? Total supply. No, this is max supply. Max supply. Rook max supply is that, and the max supply is here. The circulating supply is 52,470, because this is built. This is defined in the contract. The way you could probably even see it here. Uh, read contract. Where's the contract? No, I'd have to see the contract. I don't know where it is at the moment. But that's defined in the basically what's called the constructor of the contract. How that works. Dave says, I guess Andre is gonna rescue Pickle. It looks like possibly the case. Andre and Bantag, crazy what they do, throwing around solutions for $20 million losses. And where the hell? Who's getting 20? Someone ripped the people off for 20 mil? That's a bank heist if I've ever seen one. Pellet says, checking CoinGecko. It's time to throw around some money in alts. All right, let's hit the charts. That's what we're going to do in response to that, Pellets. Igor says, awesome. Yes, Iris is awesome. Let's take a look at the charts and see what's going on. $19,300. We ripped through this $19,000 orange line real quick, ripping up $300 to the upside. Man, I don't know. I don't know. What are we? We're in the 30 min. This does look a little flat. We could easily skip off on the MACD and continue for a higher high. It's nice to see this retrace in the Stoke. So this could easily find the bottom, and this would be super bullish. So the chart tells the story. That would be very bullish if we had a rounding bottom there and a higher low. Let's take a look at the longer term time frames on the 1 hour. I mean, it is overbought. You can see some downward pressure. Downward pressure. That does look like a rounding bottom. So on the daily, what does that mean to me? This means to me we're very deviated from the 200 EMA. So we could easily see a significant retrace. I mean, dare I say mean regression, and that would be brutal, guys. So I'm out here calling for a mean regression on Tesla, and I'm not calling for a mean regression on Bitcoin on the daily. You guys see what a mean regression would be. This is the average. This is the 200, basically 200 bar average at the daily, so 200 day moving average on this time frame. Mean regression would be about 11,700. It would be almost a $10,000 loss in the value of Bitcoin. That'd be pretty crazy. But that's really what mean regression means. All assets naturally migrate back to the mean, and I think that that's inevitable. But I think we're going to go up substantially further, which will give this average time to increase. It's obviously on an incline trajectory. So if it's here, look, if it's on this incline, check it out. You, you know, February of next year, or if it goes more parabolic, this average could easily, by January, February of next year, could easily be above the 20K. So this is why I think we're going to see rip to 30K and then a mean regression to 20K, first or second month of next year. At least that's what I think. That's the name of the game. Descending channel on Rook. Think we see 60. Yeah, it's fine. Let's take a look at the chart real quick on Rook, Dave. I don't really care. A small position for myself, offset by the gains by providing liquidity. But the macro narrative hasn't changed. Nothing has changed. So there's no reason for me to change my allocation. Worst case scenario, providing liquidity, the pool will be offset towards Rook. And I will be gaining fees. And then the contrary will happen if I mean this thing just keeps going up. Hey, let's take a look at how much volume is being done. So people are selling, obviously, at 5,900. They're probably getting about $40-50 a day. 40-50 dollars a day off of providing liquidity to that pool. So that's nice. A couple $100 a week. Can't argue with that. So I'm just going to provide that liquidity, and that's how I'm going to maintain my Rook position. Damn, Twitter's hot. I'm going to have to follow up on that. Let's take a look at Bancor. Let's see what's going on. So Bancor caught my eye, which is why I have the chart up. And you guys know that I was a big fan of Bancor, and I am a big fan of Bancor. And I was turned off, obviously, because of the significant bearish price action. Look at this price action significantly below the 200 EMA in the 4 hour, as well as on the daily. But this caught my eye. Break to the upside, retest, holding as support, basically at the 200 EMA, but at least this orange line. So that there's always some room, some buffer room, and it is above the 200 EMA if you zoom in there a bit. That is above the 200 EMA. And the Stoke is completely oversold. The MACD looks like it has a rounding bottom. It's also a higher high on the MACD. Boop, 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 boop. No, something like that. And maybe if you go something like this, whatever. Point being, this could be a rounding bottom. This is completely oversold. I expect price appreciation from here. It is a higher likely than less likely chance of price appreciation. And that is the whole point of waiting for a break to the upside of resistance. A resistance flips support in a retest and then a higher high. If you're ultra prudent here, what you want to do is you wait for the higher high. And then you get in, once you I want to draw. Okay. So you wait for the higher high and you get in when it's just above, the previous high. And that is the prudent approach. But, we have 2 out of 3. 2 out of 3 is a break to the upside of resistance, a resistance flip support. That's 2 out of 3, and 3 is the higher high. And that's the name of the game. Uh, Thoughts on Claros? No idea what it is. Shoot me a URL and I'll click on it in the chat. Let's take a look at Dot real quick. The captain brought up the Dot. No, not the captain brought up Atom. I'm not looking at Dot right now. Dot's the same thing as Cosmos in many regards, which is Atom in that I see it as a systemic disruption, maybe 1 to 2 years out. Atom, Bitcoin. So Atom got rejected at his multi-year trend line. This multi-year trend line is awesome. And it ripped to the upside during the DeFi mania this summer, but it fell to the downside. But if we go out to the weekly, yeah, that's what I was looking at, boys and girls. If you go out to the weekly, look at that. Look at that. Resistance, but Stoke is completely oversold. MACD is a rounding bottom. So this looks really bullish on the weekly. So it's a higher low, pretty much. I expect a higher low in the MACD, completely oversold. This thing is going to rip at some point. So I've had a position for a long time, probably down here, 2285, where I got significant profit going on Atom. We're in the 3000s compared to the 22. And plus it's generating yield. It's an inflationary yield producing asset. So I like my Atom position and Atom as well. Dot as well. So two projects that I think are going to produce asymmetric returns over the next couple years. If you're trying to invest in something that's about to imminently produce asymmetric returns, you're talking about Bitcoin. You're not talking about these speculative altcoins. And that's just the way it is. Folks need to bet on what is and not what they hope to be. Let's take a look at the big hope. The big hope. Look at Bittrex because it has the 200 EMA on the weekly. So guys, this is not big hope. This is rejected right here. This is horribly rejected. Now, if you're a prudent investor, you wait for a break to the upside, retest, and then the higher high. It hits that, and you want to invest in Ripple, by all means. But as of right now, this is some bearish shit, guys. This is bearish. I don't care if it's up 100%. That doesn't mean much because the technicals say it was rejected hard. It is up 127%. That's nothing, guys. That's not a lot because it's down a huge amount. So this is just a bounce off the bottom, but it was rejected. Bullishness. Bullishness was rejected. There's no ifs, ands, or buts about it. You know how you get towards more bullishness? Let's take a look at the 30-min. But you need a resistance flip support. Of course you do, guys. Of course, we don't even have a mean regression retest. There's no retest. Where's the retest? This thing is irrational. 15-min? You don't even have a retest in the 15-min yet, guys. This is not bullish. It's running on rocket fuel. You know what this looks like? This looks like Tesla. It's running on rocket fuel. I can't believe this is above a higher high, 542. Most ridiculous price action I've ever seen. It's the same thing. It's running on rocket fuel. Anything above the 200 EMA for this long, down to the 1 hour. But if you look at the daily and the weekly, way above the 200 EMA. Weekly, this thing is so far departed from the 200 EMA, it's not even funny. So, but frankly, this thing stays above. What does it mean? It means the stoke is basically coming out of oversold. This thing is ready to rip to the upside. So what does that mean? You're not betting on Tesla. This price action has nothing to do with Tesla as a company. This is entirely the Federal Reserve and its capacity to monetize debt, produce bank reserves, as George Gammon so eloquently describes, and attempt to prevent a deflationary implosion of the global financial system and the amount of debt, the amount of quadrillions of dollars of debt that are out there. Quadrillions, yes, thousands of trillions. I said it. That's what this is. This is a proxy bet against the system imploding. If you expect the system to continue, this thing's going to rip higher. If the Federal Reserve loses control over their financial policy and if there's any deflation or any systemic imbalance, this thing is going to be an epic, epic correction. Where? Back to the mean. It will go back to the mean. That's just the way it works. Let's take a look and see who's else is talking. Mark says, keep it down, please. I rewind and check it out. I spoke about it. Love my rook. Love my keeper Dow. But how do you handle it? I talked about it. More exciting announcements from DHT. 1.8 million SUSD, SUSD and SNX is a big deal, boys and girls. That is a big deal. Mark wants to know about Keeper Dow. Any opinion on value? Big value. Love my Keeper Dow, as I said. Angela says, you're late. It's okay, but this YouTube baby is all recorded. How is the dev on ADA? I have no interest in Cardano at all until they have smart contract support and until there's actual TVL. So right now, Keeper Dow, oh my God, Keeper Dow. Cardano is not even on my radar as compared to Cosmos and Polkadot. Polkadot has a Polka Swap, has oh my God, what's Akala, and Cosmos has Kava, and I mean, come on, man, listen, come on. When Cardano has smart contracts and has DeFi platforms that have TVL, total value locked, at least in the millions, and you start to see a list of projects like Polkadot in the 100 projects, and Cosmos is basically the foundation for the BSN interop. I mean, I don't see anything fundamentally strong whatsoever about Cardano. There's nothing. They don't have anything yet. Sure, it can have something, but it currently doesn't. There's nothing. There's no projects, no TVL, and to top it all off, I'm just not too excited too much about Cosmos and Polkadot because I need more bridges. I need to see more bridges because it all comes back to Ethereum. Nothing's gonna disrupt Ethereum. Ethereum's way too far out ahead, so you need the interop. You need the token, you need the custodian, and that's really where Ren comes into the picture. It's the universal interop solution between these platforms. And clearly, there's interop at the Polkadot level. That's the way the platform is designed, and the parachains. And there's interop at the Cosmos level. That's the way it's designed. But you need interop between Cosmos and Polkadot, Polkadot and Ethereum, Ethereum and Cardano, Ethereum and Elrond. You need the bridges. So Elrond is actually more developed than Cardano. It has at least the bridge. So come on, guys, invest in what is, not what you hope to be. I personally like Cardano. They're better investments because of the fundamentals. There is nothing to the platform yet at all. That's the bottom line. When you tear up Cardano makes me laugh a lot, and they have the worst bag holders. Listen, I get bullish about stuff that I'm not strong on with fundamentals, like Ripple. Ripple has great technicals, and I've had some great conversations with folks. It's not an asset I'm very interested in. I don't think it's going to disrupt the legacy banking system. I think the U.S. government wants to retain control, and they're going to do everything they can to retain control, and they're going to do it with their CBDCs. And then I look at the technicals, and this shit looks horrible. So don't get me wrong. Yesterday when this thing was ripping, Man, that was bullish. So from a technical perspective, I'll give him that. That's crazy. You can make a lot of money off that. Let's take a look at Cardano. Man, I want to see a 200 EMA. Okay. All right, guys, this looks pretty good. So there you go. So here's the different tone. From a storytelling and narrative perspective, I have no interest in the platform, but from a technical perspective, damn, look at that. That's a bounce off the daily 200 EMA if I've ever seen one. Woo! And you can zoom in on it. Here, watch. This is how you zoom in on it. Take out your horizontal trend line, throw it on the 200 EMA on that time frame. Oh, goodness, guys. So there you go, boys. There you go. Have your day, your Cardano joy. That is a serious breach to the upside of the 200 EMA on the 4-hour, a breach to the upside of the 200 EMA on the daily, a retest of the 200 EMA on the daily. This is some serious bullish action for an asset that I have absolutely no interest in. So that's the deal. You can make a lot of money off this. Look at this. Look at this. Look at the Stoke, basically in oversold territory, and you've already put in the retest. Now all you need is the new higher high. You get it right about there. This is where I'd buy if I was playing this because this thing looks primed to rip to the upside. Mark talking about value DeFi? Probably not that much interested in value DeFi. What's going on? Have you some words about StakeNet? StakeNet and BlockNet change everything. I think the time, see, it's all about value DeFi, flash loan exploit. Of course, reentrancy attacks, and this is what happens when you shift away from Yearn, Curve, and the big AMMs, Uniswap, uh, Balancer. Just stick with the big boys. Provide liquidity. Stop going. None of value DeFi is not going to change your life. You're not going to retire off value DeFi. You're not going to retire off Barn Finance and Simpsons Finance and Pickle Finance. You're not going to retire off of whatever finance. Just you're not going to retire. So stop playing around with this garbage. Come on, guys. My man Mark. I'm not knocking it. I'm just saying it's funny. I'm just come on. Stick to curve. Stick to the big boys. XDI. XDI stake. Big deal, pellets. Big deal. It's an L2 solution. It's big. I'm more of a loop ring guy as compared to XDI. Just saying. That's just what it is. Just another thought about Mustafa's StakeNet and BlockNet, man. It's just about time horizon. Time horizon. I think that they're a little bit longer of a time horizon than the imminent, ridiculous bullishness that's going on in the markets. I think you're going to see the big names because we're going to see irrational exuberance. Let's take a look at the 24-hour chart, sorted, because that's what counts. And watch the players. Watch the names. Wow, Verge. Good for you. Ripple because it's on Gemini and Dash, and this is all the shit that's on the big the public exchanges, Coinbase, Doge. You guys see what's going on here? So, and Tron. Oh my God, this is called irrational exuberance right here, guys. If I've ever seen it, Cardano. This is all the shit. This is all the shit that no one. Come on, do you guys see it? You guys see it? Isn't it obvious? Good to see 0x. Good to see. Loop ring making moves. What else? Quant. Good to see. Uni. Bitcoin SV. Oh, never really looked into Zilla, but is there like I don't know much about it to talk about it. Cosmos. Good to see. Bam. RSR. Good to see. Woo. Banned. Man, it's a hot day. Absolutely incredible. Saffron Finance. Saffron Finance, the man said. Woo! Change from Bitcoin Curve to Bancor. Nice rewards. So Bancor is the original AMM from 2017. That's a big deal. And they're just introducing their liquidity mining, their impermanent loss solution, their insurance. It's a massive platform improvement. I think they have the potential to produce asymmetrical returns. Now, I don't have much. Let me take a look and show you guys what I'm working with at Bancor. is I have 1,000 Bancor. It's not a huge amount, but I did provide 5,000 in their basically their BNT die pool. So if we go over to the data, what did I see that caught my eye? Was the BNT die pool was BNT at 500% and die at 100%, give or take. And they're going to be giving yield or uh, incentivized returns for 76 more days. And that basically means I'll have the vast majority of my impermanent loss protection in 26 days it starts, and then in 96 more days I get 100% coverage, which I would get the protected value. So I look forward. This is going to grow. So I borrowed this die from Compound, from MakerDAO. It's not my die. I borrowed it. I'm paying 4% for it, and I'm getting basically nothing. I'm paying to have this position, but what I'm interested in with this die BNT LP position is this yield. 100% yield on die, 448% on Bancor. And that whatever the denomination is, I didn't. Is it BNT? Is there incentives provided in BNT? But that's the point, and that's what's interesting. And yeah, as Angelo says, I'm not providing liquidity. I'm providing single-sided liquidity, so I have impermanent loss protection. I didn't want it to be free floating, where you go in here and you go here and you go add dual side. So when you provide dual side, you have impermanent loss potential. It's a pool token. And then, but now you're getting pool tokens, so you could go over to vote and you can lock your VBNT. Uh, so, so I have a fair amount of VBNT, obviously. So I should be locking this so I could vote. But your pool tokens, that's what they're for. Anyway, that's the name of the game. Good stuff, Mustafa. Thank you for bringing up StakeNet and BlockNet. Big deal. Bancor's old school too. I kind of put them in the category of StakeNet and BlockNet as being old school projects that really were and still are relevant and likely to be big game changers. Uh, Anyway, let's wrap it up. It's all good. I'm 10 minutes over. I don't want to keep you guys. Tuesday, November 24th. Let's see if Bitcoin breaks out. It looks oh so close. And we're going to have a hell of a stream tomorrow if this thing rips to the upside and breaches that 20,000 mark. So I thank you all for joining. Smack those thumbs up buttons. Tell everyone to subscribe. Let's get that serious Q&A going tomorrow. So enjoy the rest of your day. Pull away from the market. Take a little bit of a break. And we're going to have a nice hot stream tomorrow, as always. Y'all have a good one now. Peace.